Welcome to the Speculator's Edge, where super performance begins. I'm Lewis Berg, the founder of the Speculator's Edge. Today we're going to go over several charts that have popped up on my screen. I have built proprietary scans to find these stocks, and we're working on a breakout technique, so these stocks are in my breakout zone. I have also created my own methodology called the STOPA method, which is a trading strategy, but it's a timing technique. STOPA stands for specific timing of pivot point analysis, and we're going to go over this. So the charts that we have today, we have NWSA, News Corp, and we have Homet Aerospace, HWM. We have Flow, which is SPX Flow Inc., and NWSA International, ENVA, and Kirkland's, and OPRT, Opportune Financial. I'm going to talk a little bit about the fundamentals as well, go over that because that's also in my screening technique. So first chart, we're going to go over the technicals of these stocks. The first chart, NWSA. What we're looking for here, we're having a really nice day today. It's up 5.5%. What we're looking at is a cup with handle here, and let me get to my parabola here. So as you can see, we have the cup right here, and we have the handle happening right here. And the beauty of this one is that the handle is actually pointing down right here at the very end. This at 25.22 is more of like a shakeout. Practically, institutions are going to be shaking out smaller investors, and they're going to take some market share right here. And so this stock makes a 52-week high at 27.70, which, as you can see, 27.68 on the left side of that left side of the cup was at 27.68. This is a really good sign. We have really nice volume, high volume breaking out right here on this breakout, which is really good. And we also have some volume dry up within this handle, and that's what we want to see. This is really good. So when we're analyzing this stock, what we're looking for is this stage 2 uptrend. I'll be talking more about that, coming out with some videos of what a stage 2 uptrend is and how we find stage 2 uptrends. So practically in a stage 2 uptrend, we have institutional buying. Okay, you're going to have quite a bit of demand. What makes stocks move, of course, is money. So volume is a lot. It's the fuel that's for price. It's the fuel that fuels price. Okay, so as we're looking at this stock here, we know that we're in a stage 2 uptrend, a really nice trend. We're moving up. Your moving averages are moving up as well. Let me delete this here. So we're also going to base count within the stage 2, and the base count is a technique of seeing where you're at within where the stock is at within a stage 2 uptrend. So you can have several bases. A stock can run for a really long time and not give up. It can, just because investors like it, and so they keep pumping the stock up. Where I like to buy in the lower bases, like say a base 2, which is a secondary base. Even a primary base is okay, but it can be tricky. And also in the third base as well. So when we go to count the bases here, practically a base is a chart pattern within itself, and what we look for within that base, as for the chart pattern, we're looking for multiple things, such as volume dry up, heavy price action, really strong price action. Like I said, demand, we're looking at strength, like for the relative strength compared to the S&P 500 or the NASDAQ, whatever you're looking at. So when we're looking at this stock, how I'm analyzing this stock is this is going to be what's called a primary base right here. This primary base has huge volume pumping this up right out of this primary base, which is really good. It's showing you that there's institutional buying. Okay, so this will be your primary base, and then it'll base out again after it moves up. It'll base out again and create another pattern, which of course is kind of a cup with handle, and I'll draw that real quick to show you. See, right here, and here's your handle right here. Your handle goes right there. Okay, and so as it crosses above that $19.36, you can see that it gets a move on again. So this is coming out of a secondary base. Okay, and these bases are where institutions are taking some money off the table, and traders are going through taking their money off the table as well. So there's a little bit of selling, a little bit of profit taking, but as long as there's nothing heavy price movement down, or volatility within the price, meaning that price is really moving in both directions, up and down, and heavy, in heavy price action or heavy volume, it's good. So this has been really tight. This was nice tight price action right here within the second base. It moves out of the second base and creates kind of this normal reaction right here, and now we base out again. So you can kind of call this is the third base right here, and it's breaking out of that third base. And so, to be honest with you, I think it's a good buy, but like I've said before, you do your own homework. This is only for educational purposes only. You do your own homework, and you take responsibility for your own actions, because it's just how life is. So, but this to me looks like a good buy. We have that breakout. Let's go look at a weekly chart real quick, and we'll see what we have. So we have no supply back over here on the left of the chart. This stock looks like, on a weekly chart, looks like a double bottom. Goes 1, 2 right here, and it's already getting past that pivot point. And that pivot point, of course, let's go back. The pivot point is at 27.47. That's going to be where your real pivot point is. But as it breaks that downtrend line, it's good to go. So let's move on. Let's go to HWM again. If you look right here, this is going to be a nice stage 2. We're going into a stage 2 right here. Your moving averages are moving upwards. Good sign. That's logical. That's where you want to buy. You want to buy when your moving averages are moving up, because it's telling you, look, it's in a trend. Depending on your time frame, of course, that all depends on you, what you're looking for, how fast of profit you're looking for. Of course, we're all looking for a fast profit, but I'm talking about time frame wise. You're looking at an intraday chart, whatever, or so practically where our pivot points are going to come at. This is where the stop theory comes in, or my stop theory. Not really theory, it's just timing. It's a timing technique, and this is where the timing comes in. It's going to come in at around $33.42. So at this 52-week high right here, well, it bounces right here off of this 50-day moving average, and it has really nice volume right here coming out. Really nice demand breaking out. It hit a high of 33.69 of the day, and it closed at 33.57, practically above the high of the 52-week high of 33.42. This one has nice tight price action right here all through a couple of months. I mean, from 32.96 down to 29.69, up to 33.42, down to 30.55, and breaking out. This is what's called the volatility contraction pattern. It's a VCP pattern it's a characteristic of the pattern itself. So this is more like a cup with handle. This is Mark Minervini's method, VCP. Like he said, he describes it in his books, in his Market Wizard books, Trade Like a Stock Market Wizard. He defines it and everything. I recommend that you go read the books. So as you're going, this is a cup with handle. This will be a primary base right here. Of course, you can see huge demand coming out right here. And we've had some really good demand all in here. I mean, tons of demand. And we get some volume dry up all in here. which is what you want to see. Volume dry up is good. That means that investors or traders are not interested. There's people, leaving. They're not even paying attention to this stock. And so what you look for when the stock breaks out, you're going to look for a volume breakout as well. So you're looking for heavy volume on a breakout, and it's really good price action. So this is your primary base. So as we're looking here, we've got a little bit of supply right up here. Let me look here what this is. This is going to be, the high is at 34.27. A little bit of supply right there, but really, to be honest with you, I mean, this thing could get a move from here. I mean, it can really get a move. And of course, we have some volume dry up down here on the weekly chart. So let's go through another chart here. This is going to be flow. With flow, we have another stage 2. Like I said, when you're buying, you're going to be buying in the stage 2. You want to be buying with the trend. You do not want to buy against the trend. So it's only illogical. So if your moving averages are going down, you don't want to be buying in that downslope. You want to be buying when the moving averages are moving up. It increases the odds or your chances of actually latching onto a super performer and making money. So this is flow. We're coming out right here. We got a nice stage 2. We've got what you could call as a primary base, kind of a flat base right here, and it pushes up. Volume's okay. I mean, not great, but I mean, it's been decent. Seems like there's been some distribution. That isn't the case because the stock keeps moving up. Investors are looking at this stock. They're paying attention to this stock. And so if you want to call this the primary base, we'll call this a secondary base, which will be a cup with a handle right here. Your super pivots, or your what I call super pivots, because when breached, they can make you a lot of money quickly in a day to within a week or a few weeks. And I mean, it can be explosive gains. I mean, it's pretty cool. But anyway, so this would be a super pivot right here within the handle. I'll get into talking about this more as I develop more videos. So your super pivot's going to come right up above this hill right here, which is at a high of 69.67. As we look, it made another 52-week high at $70.69, which is good. It's showing a little bit of strength here. I mean, it's not showing a little bit, but it's showing some pretty good strength. Not too bad of a day, 2.41% up. We do have nice buying right here, nice demand all in here. We do have volume dry up. We do have volume dry up within the handle. This is what we want to see. We want to see volume dry up within the handle, because it's telling you investors, there's not hardly any investors in there. They're not paying attention to the stock. So once that demand comes out, as you have buying, since that volume dried up, you have the buying power come in, it can really start moving the stock once it hits that pivot point. And so let's go look at a weekly chart real quick and let's see what we got. We have no supply on to the left. So this one, to be honest with you, looks really good. Looks like it's ready to move. Like I said, nice volume dry up right here. Primary, secondary, so it could still have some more room to run. Potential winner right here. Let's move on to ENVA. And ENVA, this one is ENVA International. So we have, again, we got a nice stage 2 upwards here. Your moving averages are moving up. That's a high alpha name, meaning that the RS, or the relative strength, is really good compared to the S&P 500 or the NASDAQ. It's got some strength here, okay? And so we're looking at what could be possibly a secondary base, as this could be more of a primary base for a double bottom. If you look right here, makes this V right here, and of course your pivot point is going to come right here at around 27.72, which it breaks out. And of course, if you look, if you would have held on to this stock, you would have bought right there, boom, moves up to $41 from that 27.72. Okay, really nice profit. So we're looking at this here, as this is making what I see as a rounding bottom coming out, And not only that, you can also say a inverse head and shoulders with a left shoulder right here and a head, and another right shoulder with the neckline coming in right here. So that could be your super pivot or your pivot point to where you want to buy. So 36.56 is a pretty good entry point right here. Hardly any supply coming out, coming in right here. There's hardly any supply, meaning that there's not much with the price action. Price can move quickly to $41.06. So there's not really much resistance, and those are important concepts to understand. We'll go over those more as I develop more videos. So this one could be a secondary base, and the potential we could look at $41.06. Nice volume dry up within this bottoming right here, within the rounding bottom at the very bottom of it. Very nice. Let's go look at a weekly chart. If we look at a weekly chart, we already cut through most of the supply on the left side right here. Very good volume, low volume in the base here. So this, to me, this is a decent buy as well right here. Possibly, like I said, get up to $41 from here. So I mean, you're looking at a good 10 to 15% gain from here. Let's see here. So another one, Kirkland's. This one hasn't broke out yet. This one's kind of a treat right here. So what we're looking for, we're going to look for the breakout right here at $30.88, which is breaking out. Let's see here. The close was at $30.88. Okay. So what we're looking for is around $32.69. We're looking for that point to be hit, which of course it was today at $32.93. This one could really get a move on. This is another VCP action, the volatility contraction pattern, Mark Minervini's. And how you do that is you can measure the waves. So as the stock moves up and moves down, moves back up, moves down, you can measure those waves and get a percentage point on that. So from $32.69 to $20.68, you get a 36% decrease on that little hill. And then the second hill, you get a 29% decrease. So the waves are starting to decrease in percentage, and so they get tight. Price gets tight, and that's volatility. Volatility is contraction and expansion in price, and you're looking for low volatility is what you're looking for. As you can see, this is pretty low volatility. So this wouldn't be a bad trade. Let it, if anything, let it close above or break out above $33.06, which is the close on April 29th of 2021. Other than that, take it. If it does, I mean, it looks primed. I mean, it's a high alpha name, really good right here, really high alpha name. This would be more of a secondary base, because you got your primary base right here with this cup and handle right here. This will be more of a flat base, which is really good. Flat bases are really nice. As you can see, it's just hugging that 50-day moving average, and there's some shakeout points all within that moving average. So this, we do have some volume as well coming in, also volume dry up within here. Actually quite a bit of volume dry up if we go and look right here. So for nearly a month or so, which is really good. That's good. Moving on, let's go look at a weekly chart real quick. Of course, we'll see, boom, there's 1, 2, so this is a nice flat base, or however you want to look at it, rounding bottom, cup with handle, whatever. I see a flat base, or maybe an ascending triangle. So your ascending triangle is going to be like that. It's going to go up, and then the top is going to be a flat, nice and flat. So like I said, nice volume dry up. Now let's move on to OPRT. OPRT, this one's interesting just due to the fact that this is kind of a newer stock. As you can see, this is what's considered as like a growth stock, and this is reaching into more of its secondary base with a cup with handle. Now let's go back to that daily chart. This is the cup right here with the handle right here. Your pivots are going to come at $21.98. So when breached, which it's already been breached because the high today was at $22. So that $21.98 was already breached. So this would be a pretty decent trade right here. It's a high alpha name. It's been really good. It's in a nice stage 2 uptrend. All your moving averages are moving up. We got volume dry up within this handle. Very nice volume dry up within the handle. That's good. And we're having demand come out right here. So this one would be a decent trade. Like I said, it's up to you. Do your homework. If you don't like it, don't trade it. Take responsibility for your own actions. And so what we'll do is we'll go through real quick and we'll hit on the fundamentals as to show you with NWSA. Let's go look at this here. So it's on the composite rating on Investors Business Daily, it's number 2 composite rating. It is in a good industry. It's 57 out of 197 industries. Its relative strength, the group relative strength rating is B+. It's had some really good earnings. The last 3 quarters earnings average earnings per share growth has been 129%. That's really good. The only thing is the sales hasn't been so great. Not so great on the sales. Return on equity is not so great. We do have some percent change in funds owning the stock, which is good. That's what you want to see. It means that institutions are buying. And the quarters of increasing fund ownership has been 2, so that's pretty good. And let's see here, and then we'll go to HWM. So these are the fundamentals of the stock. I also screen, like I said, I screen for this, and I get a list for me. Then I do a technical scan on these stocks to find which ones are breaking out at the time. So HWM, we're looking at Homet Aerospace again. This one is in the industry. Its group rank is 11. The RS rating is A+. We're moving at earnings per share. But the current quarter was at 92%. It really doesn't have that great of earnings. The last 3 quarters has been negative 61%. Not great, but yeah, the sales isn't great. The chart looks great though. I mean, I'm more of a technical guy, to be honest with you, because patterns, when you learn how to trade patterns and everything, you can really increase the odds of you latching onto a super performer. Price is everything. I mean, price and volume, it's everything. But you can see right here, there's been a 7% change in funds owning the stock and 2 quarters of of increasing fund ownership. So that's good. You do have some backing with some buying. Let's see here. So flow. We go look at flow. Flow is ranked 7th out of the composite rating on IBD. The industry group is okay. It's at 92. Group relative strength, C+, not so great. But the earnings per share has been great for the last 3 quarters, 144% growth, 455% change on the last quarter. The 3 years earning per share growth rate, not so great, negative 6%, but the sales percent change last quarter was 26%, which is pretty good. 3-year sales growth rate, not so good. Annual pre-tax, not great. But we do have a little bit of change in fund owning the stock, which is 2%, and 3 quarters of increase in fund ownership, which is really good. So let's move on to your ENVA. And this one is ranked number 8 out of this here. This is out of the composite rating. It's in a really good industry, 21, group relative strength, A. I mean, look at the earnings. The earnings is insane right here. I mean, 746% change last quarter. 3 quarters of average earnings per share growth, 376%. I mean, 3 years earnings per share growth rate has been 68%. It's been, annual pre-tax margin 28%, annual return on equity. I mean, this stock for fundamentals, not bad at all. Pretty good, actually really good. And you got percent change in funds owning stock is 13%, with quarters of increasing fund ownership at 3. So we do have some good buying. Institutions are in there. and this stock, yeah, looks pretty good with the fundamentals. Looks pretty good technically. Then we'll go look at KIRK real quick. With KIRK, we've got industry group rank. We're at 24. Kirkland's is ranked 8 within the composite rating. It's number 24. Industry group rank is 24, which is good. Group RS relative strength rating is A. That's good. Earnings per share last quarter was 126%. The earnings per share percent change for current year has been 88%, which is good. The sales, not so great. Other than that, you have quite a bit of funds owning the stock, and the quarters of increasing fund ownership has been 3. So I mean, that's pretty good. But like I said, I'd wait for it to break out at that pivot point and then take your trade and keep a tight stop. And then OPRT, let's go look at OPRT real quick. Like I said, this is more of the growth stock as to what we're looking at. It's ranked 14th on the composite rating out of its industry, but its industry group rank is 21. Good. The group of strength is A, which is great, and this is a beast. Last 3 quarters average earnings per share growth 338%. The last quarter's earnings per share percent change was 1,125%. Yeah, that's pretty awesome right there. The sales, not so great. Not so great on that. Return on equity, there's not anything. Annual pre-tax margin, not great. But the percent change in funds owning stock is 4%. Quarters of increasing fund ownership is 1. So anyway, so there's a few stocks for you to select. Like I said, these pop up on my proprietary scan that I've created. It's taken me a long time, but to create that scan, to create several scans that I have, and I'll be creating more videos showing you, giving you potential winners, potential super performers as I develop. And I hope you enjoyed the video. Apologize for how long it's been, but anyway, I hope you enjoyed the video, and please subscribe to The Speculator's Edge, where opportunity awaits and super performance begins. Thank you.